This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Morning, everybody. Welcome to the AgYield War Room. I'm your host, Ryland Texter. If you have any questions or comments, please feel free to drop them in the chat below, and we'll try to get to them during the show. Overnight markets had December corn up 5 3/4 at 503 3/4. No beans 1241 3/4 up 4 1/2, and D Chicago wheat at 703 1/2 up 6. So obviously seeing a little bit of greenery on the scenery here this morning. We did have a flash sale of 150,000 metric tons of soybeans to delivery unknown for the 2026-2027 marketing year. Big focus last night and into today was obviously the Pro Farmer Crop Tour, and they're moving through Illinois and the western districts of Iowa. So saw some interesting kind of weaker, disappointing yields on this trip through both states so far. Illinois corn estimate at 184.19 versus 199.57 last year. Pods at 1430.37, and that was versus 1479.22 last year. In Iowa, Northwest District 1, 191.8. It was versus 197.89 last year. And pods 1269.26 versus 1279.25 last year. So pretty consistently down here. We can see a trend. Iowa District 4, 189.73 versus 207.25 last year. Pods 1273.77 versus 1376.15 last year. And Iowa Southwest District at corn at 190.59 versus 195.03 last year. And pods 1557.59 versus 1562.54 last year. So with all that being said, Justin, I was going to sling it over to you and just kind of get your thoughts on what we're seeing here, how the market's interpreting it. Obviously, we're seeing this as friendly, but just what are your thoughts after you're seeing these numbers come in versus last year?
Yeah, Ryland, thanks. Yeah, obviously we're trading a declining crop size. I think I don't think I guess some of the numbers are surprising for sure. Illinois being down as much as it was versus a year ago, which we knew it wasn't quite as good as a year ago, but I think the numbers are definitely worse than I anticipated for sure. I think a big question in my mind is going to be, there's some good and bad things about Pro Farmer Tour. So like a lot of these crop tours, right? You keep the same methodology year in, year out for consistency. So that's a really good thing. And you're basically measuring the amount of kernels, that there are. And then you use a, average kernel depth and all those kinds of things. So, when you get your kernel counts, right, it depends if you end poorly, if you end in a dry and, not a very good ending there, then you have small kernels. And if you end with a lot of moisture, you end with big kernels. And I think that's going to be a big difference. So, I've seen plenty of years where you have high kernel counts and, thin kernels, and it's not a very good yield. And when you have a lot of moisture in the end, I think you're going to have really big kernels, and I think you're going to have high test weight. So, that being said, I get the reaction that we're having. We're close to contract highs in both corn and beans. So you're getting a lot of, people whooped up and really excited. And here we go. Next stop, $6 corn and $14 beans. I'm a little more conservative on that front. I think we had a lot of, issues that would point to certainly a lower crop than last year. And I told Ben this yesterday. The problem is when you look at on a national scale, I don't think anyone really knows the difference between a 178 national yield and a 185. It's just, there's so many things to count and take into consideration. But those are big differences on what happens to, the balance sheet and price and all those kinds of things. So you could have the third best crop on record and start a bull market from here. So that's the problem, is that we have such a big demand base. We have relatively tight global balance sheet, some problems in different areas. So if you're, on one end or the other of that range of the top 3 crops ever produced, it's a different, outcome for what happens. So that's the tricky part, to just outright go and say this is ridiculous, which half of social media, this is ridiculous that we're rallying, and the other half is like, it's ridiculous that we're not at $6. I think you have to be a little open-minded here and just say, broken record here on the show, we're at contract highs. You're in an area, you got really good crops, revenues have ballooned no matter how you look at it. And how do you want to take advantage of that? It's not going to be one of those things where you can go 4 months from now, and if we break a whole bunch, so you never had a chance. Right now, we're like going into harvest. You should have a really good idea on crops, and you can make whatever game plan you want now. So this is like the ideal situation. Doesn't happen very often. There's a reason that as we go into September, you're usually close to contract lows because more is known about the crop and there's a lot of bushels to sell. It's very rare, obviously, that you have this opportunity. So do with it what you want. I think that's really the key here.
Yeah, very good. Dustin, what are your thoughts? I mean, you think, I know we were talking yesterday for a while. Just want to get your opinion on if any of this price action that we're seeing in grains could be related to what we've kind of heard and seen with the U.S. Treasury Secretary actually kind of committing to buying back long-term debt. I mean, do we see this as inflationary for grain prices kind of moving forward here, or is this all just going to be kind of focusing on crop tour and disappointing yields?
Yeah, good question. Yeah, that did resulted in a dollar drop, and other hard assets like gold and energies rose on that news. And so, yeah, these things are all dollar denominated. And I do think that definitely plays a role in the decision making for a commodity strategy for, especially for managed money funds that might have a pretty big impact on where prices go. Just taking stock of where we are right now, it is a very unique situation. Like you've got spreads, saying something that may be a little bit different than flat price right now, at least within this growing season, this crop year. We'll start with the September to December spread. That's at new lows right now. It hit 25 3/4 carry, in the overnight, and full cost of those receipts is about 24 cents. So that means we're starting to price in an interest rate. That's not that surprising. We're talking a 2 billion bushel carry out, and that's just the market showing that that's probably the case. But even when you go all the way up to like July 27 corn, and there's still a 24-cent carry east to July. Yet we're hitting, basically if you want to pull up the chart, actually, Gavin, we're really, really close to those contract highs for December corn. And I still think there's a halfway decent carry within this crop year, east to July at least. July to December of next year, however, starting to price in a bigger and bigger inversion every day. So is the market, what's the market exactly rising for? Is it we started to see this rise right around that same day as the report on the 12th, and it was from a lower yield estimate. And now we've got some reinforcement to the idea with the PF crop tour, right? That makes sense to me that, yeah, maybe there are some anecdotal signs that are pointing to a sub-trend line yield, and you combo that with the USDA economists' interpretation that we're going to see a rise in demand, export demand, and then we get Ukrainian and Russian export data, and they're down significantly for the month of August from where they were last year. So there's a lot of really supportive things all of a sudden in the market, but I still think spreads tell a pretty big story here, that there is ample supply, at least in the short run. So it's all the narrative shift. If for some reason the narrative changes and there's a bunch of willing grower sellers again, you're going right back to like, okay, well, what did Justin just say? How does this impact you financially? That these are the types of years where I could go either way. I could see it breaking these highs and going to a level that surprises a lot of people, and that's great for every bushel we don't have sold yet. and for especially for next year's stuff, right? That we can start selling next year's crop at a higher price. But if we're sitting with a significant portion of crop unsold, and all of a sudden we do go back, for, God forbid, go back to the lower fours again, that's really where you're kind of kicking yourself for, like, I had multiple chances, even if I knew I had a good crop, to do something about it, and I still came out with maybe a revenue loss. If corn goes to 425 corn, there are going to be a ton of losses in the books for U.S. growers, no question, as it stands right now. We're at 505 right now, 503. I'm not predicting it's going to go to 425. I'm just saying it's the fact that that's still a possibility. I don't think people really, when I see online, there's a lot of emotion getting into the comments, especially around the crop tour. It seems like that a lot of those comments have kind of written off the entire possibility that we could go back down the lower fours again. And I'd agree, like, the market's pricing that as a lower chance, but it's still a chance. And you just got to ask yourself, how painful is that going to be for my business if it does? And it might not be that you have to go sell your entire crop, but you can do things that mitigate that risk that are inconsequential, in my opinion, for giving up on the upside at this, especially from this price point. So even though a lot of our show is talking about opinion and where things are going, I think it's my job to kind of just remind people of the risks and the reality of what happens if it doesn't work out, where everyone that's now kind of predicting a bull market, if they're wrong, what does that mean for you financially?
Ben, what are your thoughts on this situation?
I think we've got a really strong technical market. It's kind of rallying at a time, the last 2 weeks of every option delivery. I think you probably caught some people playing it from the short side pretty hard, looking for sub first notice day. And the pretty clear technical picture and a fundamental picture that's getting more supportive this week as the crop tour goes through there. I think people wanted to see some tangible data, which when we get to the USDA in September, we'll get some of that from them. I see a market like this, and I think if I'm a bull, I want it to break, right? To own it better. Conversely, if I'm a bear, I want to see a market rally to sell it better. And I think there's a little too much of what Dustin said, completely writing off, the possibilities of what could happen. And the things that could happen would be some sort of reconciliation, ceasefire type of action in Russia, Ukraine, would imply that maybe our exports won't be as robust as they're projected. And then maybe we get to the field and the truth lies somewhere in the middle in the yield, when people have gotten all built up, and we're still looking at, I would think that with today's numbers that you would still be, top 2, top 3 crop ever produced, a lot of bushels. So commodity markets don't, I always use the words never, every, and always. And I think one of the magic things about the matrix is you can point out to people trade-offs and things that they can do to help protect revenue, because this should be, speaking for the Eastern Corn Belt, it's one of the best years that we've had probably since 22, maybe 23. So.
Okay.
Yeah, I just like to add something to that. Just thinking back to like the month of June and how many, calls that we took and panic about this crop's we're just gonna keep going lower. There's no end in sight. Everything's bearish. And I remember very well, we talked about it a lot on the show. And, to Ben's point about just looking at the numbers where crop insurance, farm bill, all these things kicked in, like it was no incentive to sell, and, in a lot of cases that it was incentive to cover hedges because you were making more money as the prices went lower, and now the attitude's completely flipped. We're back to contract highs. We're 70 cents plus off those lows going into harvest. And I think it's just really important to realize what that means. Like that's great. You can go, Ben made this comment, which I think was a good one. Like you could literally just say, I'm going to sell every bushel and I'm going to put this much money into call spreads, something really simple, and just walk away. call spreads for the, the spring, summer, whatever you want, or calls or any version of that. And, that's how much money I'm willing to risk on betting it's going to keep going higher from here. But I've got a good year in the books no matter what. And then you look forward to next year, and that's just, I think that's key. And remember how many, even online, I still see how many people talking about farmers having to get out of the business because it's just no good, and I don't really think that's the case. I think if you're diligent here, you can make quite a bit of money. So, end of rant.
Yeah. Well, thanks for that, Justin.
Yep.
We'll quick refresh of the markets here. We just opened. We got D's corn up 5.5 at 503.5. No beans 1241 up 3 3/4, and D's Chicago wheat 705 1/4 up 7 3/4. So moving on to the livestock here, I'll kick it over to myself. Had a little bit of a weak close yesterday on the cattle side of things. A little bit of 225 trade live, so definitely on the disappointing side overall, especially after we're seeing this surge in beef prices. It just doesn't look like we're seeing any of this big rally in beef really add any support to the futures or the cash right now, which is kind of unprecedented, I would say. So I think you got a little bit of concern of just the overall supply situation. I mean, we are expecting on feed report to show on feed August 1 at 102.4, placements in July at 93.3, and marketings at 92.8. So I think these are what we're going to try to price in at this point. It's kind of interesting that the market's just been a little bit impervious to some of the kind of inflationary bullish commodity story right now. But yeah, there's a lot of caution. And I think we touched on this last week, just about the border reopening and what that means for the feeder cattle market here. So it does feel like we got a lot of kind of negative sentiment still getting priced in here. So we'll see if that comes to fruition. And hogs did get a little bit of support yesterday, but of course, cash market ended up lower. You had cash at 92.10 down 227, as well as lower cutout 97.58 down 154. So we're still kind of hovering around contract lows here. And at this point, doesn't really feel like that's going to change. We just seem to be swimming in a pool of pork here. So overall, still kind of a negative sentiment in both places kind of coming into the day. So with that, everybody, we'll sign it off there. I'd like to thank everybody for showing up and watching this morning. Definitely drop a like and subscribe. That definitely helps the show here. And also check out our War Room report and other premium content that we have to offer. So signing off here. Thanks, everybody, for joining us, and take care. We'll see you tomorrow.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room Report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content. All for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield NextGen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room Report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.